This is Value Investing. I'm your host, Jun Kim. In this podcast, you'll learn everything related to value investing. Hello, fellow investors. Welcome to another episode of Value Investing Podcast. On today's show, I'm going to talk about advantages and disadvantages that retail investors have over institutional investors. I think this is very important concept and important points that we have to know, because if you look at the market, at the end of the day, there's so much dollar amount that's going to be available for the stock market gain, and we always have to compete with other group of people like institutional investors for those dollars. So if we understand who we are as retail investors, and if we understand who we are competing with, such as institutional investors, we will have a better chance to win this game. So I think that's the reason why I'm putting together this episode, to understand how retail investors can perform better than institutional investors, and what advantages and disadvantages that we have over institutional investors. So I think it's going to be a very interesting topic to go over. But before I get into the details, let me give you a quick disclaimer, as always, that this podcast is for entertainment purposes only, and it is your responsibility to consult with your investment professional for any investment decisions. So without further ado, why don't we get started? So what I'm going to do is I'm going to talk about advantages first, because that's what matter. And also, I'm going to talk about disadvantages afterwards, and then see which kind of strategy will actually work good for retail investors. So the first advantage that we have over institutional investors is that we can invest our money in the long term. Let me just try to explain to you what I mean by that, because a lot of institutional investors like hedge funds or private equity funds and like pension funds, all these funds do not have the luxury to put their money in the long term. Even if they are long-term value investors, they will get a lot of pressure from their clients to make alpha in the market in the short term. So if they don't perform well, let's say over the next 3 years, they're probably gonna lose their job. So they have career risk that they have to, think about when it comes to producing alpha, when it comes to producing returns. And if you don't make really good return in the short term, then good luck with that. You can lose your job. So they always get this pressure, and even though in their head that they want to actually put their money in the long term, they actually care a lot about short-term performance, like quarterly return and yearly returns, and that's what clients care as well. So, but as retail investors, we put our money in the stock market, so we don't have to care about these short-term returns, and we don't have anyone to report to. Like, we don't have any clients, it's just our money. So we have a lot of flexibility and autonomy. The only thing that matters is how well we can control our emotions. And as long as we can do that, as long as we have rigor and discipline that we can put in order to control our emotions, then we can become long-term investors easily. But that's not the case for institutional investors. So that's one huge advantage that we have over institutional investors. And as I mentioned, institutional investors include hedge fund managers, private equity managers, pension fund managers, and mutual fund managers. These are the people who actually do investing for their career, and every year their performance is going to come out and it's going to be published. And if they don't actually make it up to the top, then they probably going to lose their job within 3 years. So they don't have that luxury. The second advantage that we have is that our capital base is very small relative to institutional investors. So a lot of institutional investors manage like billions of dollars, and they don't have luxury of investing their money in small cap stocks, because it's not going to make a dent on their portfolio even if they actually make a huge success in those small stocks. So what they actually do is avoid these small stocks. They will not actually produce any meaningful returns on their portfolio. However, retail investors do not have that big capital base, which means that our pool of investment is a lot larger than institutional investors, and we will find more stock investment opportunities in different areas. So we can invest our money in a small company that nobody has ever heard of. But if that company actually can make it big in the future, then we can make some investment success there. And also that's quite important because in many cases, efficiency doesn't exist in these small stocks. Whereas if you look at large cap companies, a lot of analysts, a lot of researchers actually do their research on these stocks. So when it comes to efficiency, you'll find more inefficiency in small stocks than large stocks. So whenever there's inefficiency, there's always investment opportunities and more chance of coming out as successful. So the second advantage, as I mentioned, is that our capital base is small. That actually provides and open up a bunch of investment opportunities that institutional investors do not have. The third advantage that we have is that we don't have to worry about liquidity. What I mean by that is it's actually related to what I just mentioned. Since our capital base is so small, when we buy into a stock, like when we actually want to have some position in one stock, we can actually get in and get out quite quickly without affecting the price. But a lot of these institutional investors manage billions of dollars. If they want to, have significant position in one stock, they can actually drive the stock price quite up. So they may not be able to secure enough position unless their positions affect the stock price. So that's going to be also a challenge, and they cannot also get out of the position quickly. So that's the really good thing for retail investors, because let's say there's some scandal, coming out of company A, and you think that the company A's business model is still intact and management team is still good, but there's just one scandal that actually drove the stock price down, and you think that this is temporary. As a retail investor, you can actually get into that stock position quite quickly without affecting the stock price, going up. But institutional investors, even if they think that this is good investment opportunities, once they actually pour their money into this stock, the stock price is going to go back to original level, and you'll not accumulate enough position to make meaningful returns on your portfolio. So that's a huge downside of being an institutional investor. So in summary, you don't have to worry about liquidity and you don't have that constraint when it comes to investing your money in the stock market as retail investor. The fourth thing that I want to talk about here is that you can buy any stocks as you wish. This is your money. You don't have any clients. You have full autonomy as it relates to investing your money in any places. But if you look at hedge fund managers, private equity managers, they have their own specific goals, and they actually have to specify in their document what kind of stocks they're going to actually buy. So if you're, large cap investor within, pharmaceutical company, then you tend to buy companies in that area only. And if you say that, if you specify in your investment document that you can only invest in US companies, then that's the only thing you can do. But you don't have that kind of constraints as a retail investor. You can actually invest in US stock market, foreign stock market. You can invest in large cap, small cap. You don't have to stick with one strategy, value strategy, growth strategy. You just have a lot of flexibility when it comes to investing your money. You don't have to be stuck with one investment strategy. You don't have to get stuck with one market. You can actually do whatever you want to do with your money. So with that flexibility, it actually opens up more investment opportunities. That's, I think, a huge advantage that you have over institutional investors. Okay, so those are the advantages that I wanted to mention as it relates to retail investors. And let me just switch gears here a little bit and then talk about advantages that institutional investors have over retail investors. The first thing that I want to mention is that institutional investors have a lot of people and resources when it comes to doing their research, investment research, and so on. So they can actually have a lot more information that we have. Since like these are the people graduating from, Ivy League schools, and they actually have, a lot of investment knowledge, so they may actually have some upper hand in that sense. The second one is that they may have better tools like Bloomberg Terminal. So Bloomberg Terminal is, I think, thousands of dollars. So I don't think that retail investors can afford to have this Bloomberg Terminal at home as an investor. But a lot of institutional investors have this type of tools that are available quite easily, and then they probably can extract more information and data, and that actually provide upper hand when it comes to investing. The third advantage that institutional investors have is that since they have a lot of money, they can actually buy alternative data. And this is quite fascinating field, and probably it's all the rage these days because hedge fund managers buy alternative data in order to understand how the business is going to perform in the future. Maybe I'm going to talk more details later about how you can use alternative data in order to predict whether or not the business is going to prosper in the future. But let me just give you a quick example. So hedge fund managers can buy, location information. So these days, everyone carry their cell phone with them wherever they go. And if they provide permission to cell phone companies or other companies about their location information, then this location information is going to be very valuable. So for example, as a hedge fund manager, you can think about, investing in Home Depot. And how do you know that Home Depot sale is going to actually do good in the future? You can actually buy this location data. Like if you have enough location data for, let's say, 20% or 50% of population, you can actually get exact location of that individual, and you can know how many people are within specific Home Depot location in real time. That's quite fascinating. And you can even know like how many people are lining up at the cash counter. And by using this data, you can estimate how much the Home Depot is going to make in that day or over the next quarter. And that data, if you use machine learning and combine that with machine learning and artificial intelligence, that can become very powerful. And you don't have that, kind of tools and data as a retail investor. And that's, I think, huge downside. And in the future, more and more hedge funds will probably use big data and machine learning in order to get ahead of other investors. And you don't have that luxury as a retail investor. The next also advantage that institutional investors have over retail investors is that they can become an activist investor. So they can buy enough stake and they can actually influence management team when it comes to their investment policies. They can change the management team. They can actually have their people on the board, and they can influence the management team in a way that the management team provides more shareholder-friendly, policies and so on. And we don't have that luxury because we don't have that big capital base. So even if we buy some, shares, it's going to be very, very insignificant, and management wouldn't care who we are. But if you're an institutional investor, if you can accumulate enough percentage of ownership, then you can definitely place your own person on the board, and you can actually push for investor-friendly policies and so on. Then that's going to actually drive up the stock price. So that's one advantage that institutional investors have. And lastly, institutional investors can buy a company 100% outright. So we don't have that much capital, so this is also the same thing. But once you buy 100% of company, you can actually change the management team. You don't have to do the reporting. You can take the company private and try to be more long-term oriented. You don't have to worry about stock market. You don't have to worry about all these reporting requirements and regulatory, burden. So there's just a lot of benefits of taking the company private, and they have that option available if they want to. So those are the advantages that institutional investors have. Today, I talked about advantages and disadvantages that retail investors have over institutional investors. I truly believe that once you understand fundamentally what advantages and disadvantages we have, then we can definitely beat institutional investors, and we probably will have a better chance. That's what I'm trying to say. We will have a better chance to come out successfully in this game, because as I mentioned, there's only so much like limited dollars available for in the market, and we are competing this alpha and dollars with institutional investors and other group of investors. So as long as we understand who we are competing with, we will have a better chance to win this game. If you're a retail investor, you're probably gonna have a better chance to win this game if you look at small cap stocks and also stocks that have been overlooked by a lot of these institutional investors, because that's where you can find a lot of inefficiency in the market. And you can also look at other countries, like foreign country market, because that's probably going to be the limitation that these institutional investors have, and so on. So think about all these points and then see what kind of strategy is going to work best for you. And that's something that I wanted to tell. I hope you enjoyed today's show. And before I end, I just want you to know that I'm going to appreciate if you can leave your review rating on like Apple iTunes or whatever platform you listen to this podcast, so that other people can know more about this podcast, and they can find this podcast easily. Anyway, thanks a lot for listening, and see you next time.